The Vanguard Health Care ETF, VHT, is an exchange-traded fund that aims to track the performance of the MSCI U.S. Investable Market Healthcare 25/50 Index. It is designed to offer investors a low-cost, diversified, and convenient way to invest in the U.S. healthcare sector. In this script, we will explore the VHT ETF in detail, looking at its history, investment strategy, holdings, performance, and potential benefits and drawbacks for investors. The VHT ETF was launched in January 2004 by the Vanguard Group, which is one of the world's largest investment management companies. Since its inception, the ETF has grown in popularity, with total assets under management of around $18 billion as of January 2023. The VHT ETF invests in a diverse range of healthcare-related companies, including pharmaceuticals, biotechnology, healthcare equipment, and services. The fund aims to track the MSCI U.S. Investable Market Healthcare 25/50 Index, which is a market capitalization weighted index of companies in the healthcare sector. The index includes companies that have a minimum market capitalization of $1 billion and meets other eligibility criteria. The top holdings of the VHT ETF include some of the largest and most well-known healthcare companies in the world, such as Johnson & Johnson, Pfizer, and UnitedHealth Group. The performance of the VHT ETF has been relatively strong over the years. According to Morningstar, the fund has returned an average of 13.4% annually over the past 10 years, as of January 2023. This is compared to an average annual return of 13.0% for the S&P 500 over the same period. One reason for the strong performance of the VHT ETF is the defensive nature of the healthcare sector. The demand for healthcare services and products tends to be relatively stable, regardless of the state of the broader economy. As a result, healthcare stocks can offer a degree of protection during economic downturns. There are several potential benefits to investing in the VHT ETF. One of the primary advantages is the low-cost structure of the fund. The expense ratio for VHT is just 0.10%, which is significantly lower than the average expense ratio of 0.69% for healthcare sector mutual funds. Another benefit is the diversification that the fund provides. Rather than investing in individual healthcare companies, which can be risky and time-consuming, investors can gain exposure to a broad range of healthcare stocks with the VHT ETF. This can help to reduce the overall risk of their portfolio. While the VHT ETF offers many potential benefits, there are also some potential drawbacks to consider. One of the primary risks is that the healthcare sector can be subject to regulatory and political risk. Changes to government policies or regulations can have a significant impact on the performance of healthcare companies, which can lead to volatility in the fund's returns. Another potential drawback is the concentration of the fund in a single sector. While diversification can help to reduce risk, investing heavily in a single sector can also expose investors to idiosyncratic risk. If there are issues specific to the healthcare sector, such as a major drug recall, the fund's performance could suffer. In summary, the VHT ETF is a low-cost, diversified, and convenient way to invest in the U.S. healthcare sector. It offers exposure to a broad range of healthcare companies and has delivered strong performance over the years. However, investors should also be aware of the potential risks, such as regulatory and political risk, and the concentration of the fund in a single sector.